It's the banks that are dragging the market down. The tech stocks are edging higher, but they're actually struggling at this particular point in time. So we'll have a look at the banks, and we'll focus mainly on the bearish side of the markets. So with our banks here, this is Goldman's here, obviously, and in a very conservative count, if we look at the low and then look at 3 waves to the upside as wave B, then we can look at wave 1 here with an ABC for 2 here. And we can look at this 3rd wave still unfolding here. Now, all the banks are a little bit different, but they're all kind of doing the same thing. They're all sort of herding together in their own way. But they're all, need to be taken individually as well. So this is the conservative count here with 1, 2, 3, 4, 5, and I think that it's okay to be conservative, and because in a nutshell, what we're really looking at here is, say, the length of this move here from this whole leg here to something over here, So for this to be pulling down here in 5 waves is kind of got the right look and feel about it. At the same time, things could get worse. However, the sovereigns have stepped in, and governments have stepped in rather, and are controlling the situation on the banks. It obviously doesn't mean that it's solved. We know that the 2007-8 financial crisis pretty much put a dent into the repo market, the engine of the finance system, and never really recovered in that. And so all these events are just all connected, and they're it would people would just get used to it. Oh, another financial crisis, and so on. And will be like the frog in warm water. I think that's what's going on. Nobody's really got any answers for anything at the moment, and so on. But we all feel that the debt and the situation is simply not good, and but we don't know the real sort of outcome and the devastation that can be caused either this time around or further up the scale of time. But anyway, this 1, 2, 3, 4, 5 here for Goldman's is a reasonable, practical start at looking at the bear side, and the Bank of America has been a little bit weaker. We have been looking at the regional banks as well. They've got a much more bearish picture occurring. But this pattern is the same as Goldman's. But remember, Goldman's haven't taken out these lows here yet. Goldman's is still up here. So the Bank of America is in a different slight situation. So we can look at this as 1 and 2 here, and then somehow down here is 1, 2, 3, 4, 5 here. We can look at it as wave 3 and 4 here. We could look at it in a more bearish light as well. We could also bring wave 1 here and 2 here and look at it much deeper. But either way, either way you want to look at this, this is not going to finish to the downside in 3 waves. All right, so all I'm explaining here is that, sure, I don't understand the bigger picture. I don't understand a lot of things, but I do understand that this particular pattern here to the downside still needs to come down. How far it comes down is another question, and we'll have to make analysis on the hop and read how it goes. Elliott Wave is discretionary, and to be fixed is a little bit dangerous. You get yourself into trouble doing that. But we can quite clearly see that we are to the downside, and we are short on these, of course. So coming over to the S&P, I think it's kind of interesting. This is a weekly chart now for the S&P. So, if we were talking about, just kind of squash this in here a little bit. In fact, I'll just use Goldman because it's kind of a bit more there. So, this situation here, what we could do is we could This was on the 17th of November, roughly. So November 22. I think that was about November 22 there. So November 22 there. So, see, the question is that there's a couple of things. There's a couple of ways we could look at this situation here. We could look at this with we could look at the A wave here. And then this would make an ABC for the upside here. I'm just shooting the breeze now, right? So we can look at it with wave 1 here and wave 2 over here, which is not such a silly count really, because it kind of puts things in the right timing of this sort of ending here in line with the banks. The thing I don't like about this is the wave 2 here is rather large compared to wave 1 here, so it doesn't really have the right look and feel about it. So I don't think that's correct at that point. So I think that we're better off over here, but I think it's also important to consider that situation with that there as well. So anyway, now that we've considered it, and we'll keep an eye on it, we really just want to track this move down here. Now, first of all, we need to really, all of this particular pattern here from the day that it got here, weaving its way across here, it's been trying to find it either as support or resistance in the bigger scheme of things, isn't it? It's probably spent a little bit more time below the level, so the weight is to the downside here, and we know the banks are to the downside. It doesn't mean that it's actually in a bearish market at this point in time. Now, if it because when things, when markets reject things, if this was it here, it's quite a sort of simple process in a way. Now, it can get a bit sort of complicated around here, but as soon as it starts taking out previous lows here, then that's one way to look at it. So we haven't really taken out any of these lows yet, so we could say, well, if it took that low out there, then that's pretty obvious, Pete, isn't it? And that's right. The other thing to this is that just seeing this particular 4,000 being retested here, because that's what it's doing. We're currently looking for short trades rather than long trades, because the short trades would come before the long trade setup. So I'm not talking day trading, I'm talking position trade. So at the moment it's dropped through here, it's gone back up and retested. So if it took the low out here, then that would be weakness. If it took this low out here, that would be weakness as well at this point. Can it still go up here further? Sure. This move from the top to the bottom here has rallied back to the 61.8%, which is here, but still it could go back up to the 78.6. It could have another little move up here and all of this. So there might be a little bit more sort of fluffing around in all of that, and a rally up there would kind of coincide with these banks having some sort of ABC sort of correction here. We've talked about these banks shoring up in here. We know that after the drop here, we could see that they had been shoring up, and they'll kick back and all of those sort of things. So they're doing that. But what we need to keep an eye out here for is that the market rejecting the 4,000 and making new lows. So any new low in here on the intraday basis, and we really need to be all over it, So this is even though this has been sort of boring and complicated through here, this is the time not to fall asleep at the wheel, so to speak. Okay. Now, I do have bullish counts, but we're just focused on the bearish counts, and the reason for that is not about being bearish and bullish thing. It's the simple fact that we don't have the 4,000 as support. The market has spent more time under this closest largest number, and the banks are bearish. And even though the tech stocks are been pushing to the upside, they have been in a topping process, and they could very well be at their tops at the moment. So when we have a look at, just as an example, I won't go into too many, but Facebook here, we can look at it as 1, 2, 3, 4, and then we're going up for wave 5 here. So we've got 1, 2, 3, not a very long wave 3, then 4 and 5. So you can kind of see Facebook. I won't go to the intraday, you can go to the video to see that, today's video, but one would think, well, it could go higher. But I guess if the 200 became the resistance, that could be a sign that the top would be in there at that particular point. Can we count 5 waves up here? Yeah, we can. They're a little bit rough and ready, like myself, but we could kind of consider it. And if the 200 became the resistance, then we could look for the short trade at that point, you know. But it is, you know, it's stalling up here for this. So there's, you know, Apple's the same, and yeah, you know, all Amazon. So they're all unique and special and different, just like ourselves. But you know, we're all herd animals in a way, you know. So I'm sure there's some lone wolves out there, and that's good, the old contrarian. But yeah, the markets will tend to move in herds and groups. So we've got, you know, finance to the downside, we've got tech stocks to the upside. That those tech stocks that have been going to the upside, they're carrying a bit of weight on them now, you know. That's all I'm saying. So if this was going to fail, this is where it's going to fail from. Okay, and there's different ways to count this as well. All we're looking for here as a trader is failure in the markets. So let's just go in and have a bit of a look. I'm not sure which one. So this is the same picture here, just on the daily chart. We'd been, you know, this move down here, you could count it as corrective here. It does make a nice A, B, and C wave here for a bullish market, you know. But like I said, the only reason that we're looking for this is that we can see the banks need to go down further, and the S&P and that, and, you know, they're carrying the banks in their sectors. So they've been shoring up for a little while, as I mentioned, but you know, they're in a bit of a rally at the moment, and they could drop. So this move here, you know, we could get another move up here, all right, before going down at that point. So that's okay, but we were looking at here, shorting under here. We can go to here, we can go to here, we can go to here, and maybe we can go into here somewhere. Do you know? So this is what we've been doing in this move up here. Now, yes, we can day trade. We mentioned that, you know, you can trade in this, you can trade up here, you can trade up here, you can trade up here, but they're not for positions. They're not for taking positions. They're just they're more than scalping, but you know, they're not day traders, I guess, intraday traders. But yeah, so we're looking for failure at this point. You can count it as 5 waves down. It's not a great 5 waves down. One of the things too, like with the Russell, for example, the Russell has taken out this low here, leaving this move here on the Russell as a corrective move, you know, and the Russell has nice 5 waves down. So yeah, anyway, it's a bit like Baby Bear, Mama Bear, and Papa Bear, really. So Papa Bear being the Nasdaq at this stage, holding the fort, and this would be Mama Bear here, carrying the banks, carrying the load. So yeah, there's different ways to look at this. I'll just go to our 50k tick chart, which has got this one in here. Now, this has got a slightly different count, and it's the same count, it's just different. See, I've got wave 2 here rather than the wave B here, and in that case I would have wave 1 down here and wave 2, but in the other video, in the other images, we saw wave 2 here. It doesn't really matter, they're just different degrees of wave 2. So I'm just takes me a while. I like to put things in place and look at them for a while and sleep on them and see how I feel about them and make any adjustments and those sort of things. And, you know, so it doesn't really matter about, you know, what pretty color it is. It's just the, you know, the point that we've got wave, probable wave 1 here and 2 here. And it does make a nice corrective pattern, this move here, you know. Sure, we can make it we can make it bullish, that's not a problem. but it's a better fit as a corrective wave. And we've just been bringing this up from these lows here, so we want to try to get it up here somewhere, and because this is where we want to be building in from for the taking positions over the longer term with all of this. But as it stands, that's where that is at the moment. We can count this down here as wave one. It's a pretty crappy wave one, I have to say. And on the Nasdaq, the stronger ones, this little move down here, counts quite nicely as, just remove this, all of this here with the Nasdaq counts quite nicely as a triangle pattern, as an A wave, a B, C, D, and E wave here, and can go up here higher. Now, that's not to say that that's the case, but because we're going to be looking to short under here, because we could view this as wave one here, two here, one here, ABC for two here, down for one here, and then back for two here. And now that this has moved down here, we can look at this as wave one and two here. So we can short now with the Nasdaq, we can put it under here, because if it's going to be a triangle pattern, it's going to go up and our short trade's not going to be triggered. And our short trade doesn't have to be the end of the world either, as big as, we can just build in very small positions as we come down here. So coming back to this particular space, however, so from here, if we just go into, we're on the intraday already, but a 50k and a 20k is almost like a daily chart. So we're going to go, I'm not going to look at the bullish counts because I've already waffled on too long. We're going to go to the 1k. So we're going from, so it's quite a drop at this point. So that leaves us with our little wave two up here, and we're looking at all of this down here for wave one. And then we're looking at this as an A and a B and a C wave for this particular top here. It fits okay, there's nothing wrong with it. All of the third wave fits in here, everything sort of fits together. So we would need to see the market break down from this point for this particular count to be correct. We're sitting at the 4 here at the moment. I'll just check. Just looking at the SPY here, this is the SPY here. I have to go to TradingView to get the SPX, but this first move here kind of counts as an ABC for the A wave and ABC for the B wave, 1 and 2 probably. 1, 2, maybe all of that there. Maybe there is one more move to the upside. This is, the stochastics are kind of looking at that too, I guess. So there can be another little move in this case here to the upside. That would suit the S&P, the Nasdaq rather. So probably count that as down here as 1, 2. Anyway, it doesn't really matter. Just checking to see what price it's at here. This would be the short trade under here. I mean, if we were going to short these here, what we kind of want to see is we want to see a nice little 5 wave move to the downside. Something that's going to be get our sort of, we're here at the moment. We want another move down here so we can move this over to here. Right, and then we can continue to move it at that point. That's kind of what we're looking for on the SPX and so on. So currently with this here, we can still have this. We'll just paint this green here for this. Let's just do that. So we're just still preparing for short trades. So we can short under here. Could probably even just bring this up here for a little bit. So this is the 61.8% for this wave 2 here. So we're quite high up here, but I don't mind that because of this large number here. Markets like to work themselves to high numbers. Now, this move down through here, I've counted it as 1, 2, 3, 4, 5 here. It's the most horriblest looking impulse wave to the downside. It counts much better as an ABC pattern to the downside. This can certainly be counted as an impulse wave to the upside as well. I understand that, and I understand because of the Nasdaq here, this particular pattern traveling here can still push to the upside, which would leave the S&P going to the upside. But that doesn't mean that we would trade long at this point. If we got a move up here, then we could probably view this as a little wave 4 here perhaps, but I would still need to go long at this point. We would still need like a pattern like this sitting here for this. So we have to wait for the first high above the level like this one over here. We can go long above that one. So we're waiting for, we need that first high above the levels, but it could push up there and then work down from that point. And this is where it becomes a little bit more interesting because of this 3-wave move here. Anything below that 3-wave move, and we can also look to short at that point. So we're kind of just, you know, bringing the bar up, so to speak. And we'll be working a trade across this particular level here. I think there's a good case for a push up here when I look at the banks moving up. So we'll see, and it can certainly take this top out here as well. And then in that case, we would need to look at this over here. We would put wave C here and would make a wave B over here for this, and then this would become wave A here. It'll be like that, you know. So we're just being very patient, just waiting for it to, you know, we've been patient, we're just waiting for it to do its thing, and you know, it'll come to us. We don't have to chase this. So let's just see how it goes. We're doing all the right things, and while this is rallying here, as I just mentioned with the banks here, this little move up here, a bit hard to count it on Goldman's here, but on BAC here, this is counting like a little 5 waves up here. So as an A and a B and a C up here, with a bit more to go, that all sort of fills in and suits quite well. Yeah, so that's that. And the other thing I think is interesting as well is that if the market's going to push down, this is the DXY here, the Dixie dollar, we're looking for a move up here for this. If this moves up, then after this ABC pattern here, and we've got 5 waves here, and we've got the low in here. So if this continues to push up here, then that's going to place pressure on the S&P and commodities and all of that as well. If this low breaks here, then we're going to be looking at a move down here further, and we'll have to bring this wave 2 here down to here for as this ABC here. But as I mentioned before, I'm not that, I mean, this here is an ABC pattern here is okay. But yeah, when I have a look at this market here, which is the dollar index UUP here, from the low here, we've got 1, 2, 3, 4, 5 for 1 and 2, 1, 2, 3, 4, 5 for 3, ABC for the 4. We have 5 waves here, and we have a corrective wave here, and we've called the low in here, and we've watched it jump up to here and then jump up to here, and it looks like it wants to jump up again here. So the further that pushes up, that's going to put pressure on the market. So for this market, we can see a nice 5-wave structure here. I can get a 5-wave structure out of here. All I need to do is put wave B here. This was a news event here. If I chop that off here, then I've got 1 and 2 here, and that was the news event, and then 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave, which is probably how I should look at it, but everybody will, not everybody, but folks will start throwing stuff at me again. But let's just, while that low stays in, the dollar is stronger, right? If that breaches, then the S&P will be stronger at that point. So this is kind of just a little side thing to watch. I mean, obviously it drags the currencies around and the precious metals and all the rest of it. So let's just see how this plays out here. This is the Nasdaq here. So this wave E I got here, this would be the A wave. The B wave here hasn't taken out the high here, and then I've got 1 and I've pulled all of this apart, but it's just 1 and 2, and then 1, 2, 3, 4, 5, the 3rd, 4th, and 5th here for the C of E here of 4. That's how that would play out. This move up through here, it kind of looks better corrective, doesn't it? And this move here that's coming down, you know, that suits a bit of a corrective move here. This move that's come down here, that's kind of, it almost looks impulsive, doesn't it, you know? So we could look at it as wave 1 here and wave 2 here. So this is why we've got to keep an eye on it and just be ready at this point. You don't have to bet the you know, everything on this particular move here for this. But if this does break here, this will be some sort of little A, B, and C here. And then it'll be 3, 4, and 5 here. So that would be 1, 2, 3, 4, 5. So that kind of takes it down past here. I suppose we could look at it as, in that case, we could look at it as, let me just get this here. I didn't mean to put that. We could look at it as 1 and 2 and 3 and 4 here, and then down for 5 here. And then this would still make the A, the B, and a C wave here. So any trade that you put on here has got to be minimal. So I'm just going to make that a thin green line so we can cope with anything that happens at that point. I mean, even if it's just, you know, one mini contract or whatever you do, it's fine. And we'll look to, and, you know, I mean, obviously if the 500 here became the resistance as well, then we can look to add under that, you know. Those tech stocks are quite toppy at the moment, and they won't all finish off beautifully. You know, they'll all be pulled around. You know, you could. It's like corrections. You know, it's like a triangle pattern almost. You know, it doesn't take a lot to push it. You know, once a triangle is finished, because they're all corrections on lower volume. So if this is all on lower, let's just assume for a moment this is a wave 4. That means that all of this here, corrections are on lower volume than the previous trend. So when a correction's been going for a while, it's on really low volume. So it doesn't really take a lot to kick it up or to, you know, to kick it down in that case, you know. We should check the volume on these up moves and compare them to the down moves here. That would be one thing to do as well. So anyway, yeah, just shooting the breeze. We're just, you know, as I said, in times of peace, we prepare for war. So in a bull market like this, a corrective rally, we have to prepare for the short trades, and that's what we're doing. We're just, you know, we're just getting in there amongst it all. So the Russell here, this is a this particular pattern from the this is the ETF here. So this is what I wanted to say here. I'm just using this chart because it's nice and clean. Okay, so my other work one's messy, but because this took out this low here, it kind of forces this here to be a 3-wave move here. Now I could look at it as wave B here. I could look at it as wave 2 as well at this point. This sort of brings me over closer towards the banking side of things at this point, and that's valid there as well. Not that one, but that one. And then this, we could look at this as, you know, there's 1, 2, 3, 4, 5 here for 1 and 2. And then 1 and 2, and then the 3rd, 4th, 5th for the 3rd, the 4th, and the 5th here. This is very much like the banks here. All of this is, you have a look at BAC, this is very much like the banks here. So this can play out 2 ways here. We could look at this coming down further. We could look at this as wave 1 here if it decided to drop, and wave 2 coming back into this little area here. So the point being is that you need to be short under here. So we can just turn that line green. And the other thing here is that if that is 5 waves up here, we'll see a little B wave here and then a C wave here, just like BAC, Bank of America, and then down from that point. So there could be wave 2 at that point, and not just wave 1 here and 2 here. But it doesn't really matter. All we need to do is start from the bottom here. If we get a B wave here, we move into the B wave. If we track 5 waves up there, we'll track those 5 waves up there. And then when we get a turn of the first impulse wave to the downside, then we can move this here up under here as well at that point, and then continue to build in this side here. So yeah, we start from the bottom and work up. But what I'm also saying here is that the Russell is weaker, and this is 5 waves here, but not only that, is it's broken this low here, which means in time it will take this low out here. So if we do put that as wave 2 here, and wave 1 here, and wave 2 here, well then all of this really down here has got to be wave 1 here. And that brings me back over to, you know, the banks really, because when I have a look at BAC here, if we look at this as 1 and 2 here, like when you look at the Russell, then we'd have to look at, we can't look at that as wave 2 here and then wave 3 here. You know what I mean? It doesn't work. So that means that this bank over here, this 1, 2, 3, 4, and 5 that I got here is really a bit of a mismatch. It's better off looking at wave 1 here and 2 here, and the Russell's got the same little pattern as this one in here. That's what I was saying before with the Russell. So this can be a little ABC for 2 here, and then have this down here as 3 here. You know, this wave 3 here, and this wave 3 still way down here somewhere. So that's kind of what's at stake a little bit, you know. So I'm still mulling it over and, you know, giving it a bit of thought and, you know, trying to sort of piece it all together, because it's not just about one market, it's about the whole as a whole. And then the other ones will get dragged around within that, you know. That's sort of how it works. So anyway, we just keep plugging away here for this. We've been through all this here for a little while now. But that's the Russell. This is just a CFD on that. So basically what we just said, then we're going to be looking to short under here. But we're going to get a better position than that. It's a long way from the price at the moment. I know that. It doesn't matter. We'll get there. You know, I mean, if this just drops here, there's going to be a 5-wave move here, and then we'll look at that. If it comes down in 3 waves, then we'll know that it's a B wave, and then we'll end up going up here further for that other move up here, you know, for wave 2 up here, and we'll put wave 1 over here for that. So there's a few different things that we can look at here, but it doesn't matter. We just start from the bottom and then we just work up. That's all we need to do. So we're not ready to go yet, and sure, that can push up and make a new high here, you know. Yes, I can get an A and a B and 1, 2, 3, 4, 5 out of this, and yes, it can push up further, and yes, I'll have to rearrange that. It doesn't really, the A wave here and the B wave here doesn't look right to me. It's got no, wave A and wave C have got no relationship together. So to me, this is better spent like this here as an A and a B and a C wave over here, and yeah, there can be another little move up here. So we're not there yet. We're just at the 50-60% retracement level of this particular move here. So we're not there, but we're going to start from the bottom up with all of that. So and this is the Dow Jones here. So there's a bullish count for this as well, but because we're on the bearish side, we're looking down at this as 1 here, an A and a B and a C for wave 2 here, and then we can count all of this down here as 5 waves. So we've got the extensions in wave 1 and 2, and then 1, 2, 3, 4, 5 for the 3rd wave here, and A, B, C for the 4th, and down for the 5th here. So we can look at this as wave 1 here with an A wave here, B wave here, and a C wave up here for wave 2. And then we're looking this down as wave 1 here, and then back for wave 2. But I don't particularly like that at all. I don't like this as wave 1. It doesn't really give me much. So we could easily go wave C over here, wave A here, and wave B here. It doesn't really take, and then track 5 waves up here, making a new high here, sucking in the bulls and then dropping at that point. So there's still a lot to work through. But some of the takeaways is that, do you think this is 5 waves up here? It doesn't look like it, does it? Do you know what I mean? Once again, we've been starting from the lows here. We just keep moving up, and we'll get another one up here and another one up here. We'll probably end up shorting up here somewhere, you know. It's not like this whole wave 1 down. And we know the Dow is been under a bit of pressure there, but you know, the 50-60% is still up here for this, you know. Not that it has to get there. I mean, 40%, 50%, 60%, 80% wave 2 can go to, you know. It can go anywhere. Sometimes it hits the 61.8%, and, you know, we all start staring at the moon, you know. So, yeah, it's still a mystery, but yeah, anyway, we can put that under there, and we still need to do more work here. And even if it does drop in 5 waves here, then we'll just see the ABC pattern here, and then we'll move this up into here. I won't go to the intraday because I mean, we are on intraday to a point, but yeah, we're not there sort of ready at this stage. But yeah, we'll look for that. We want some confirmation that we're on the right track. So we're getting there. Alrighty, enough waffling. I'll leave it all at that. So like I said, the markets can move higher based on what we can see, not only with the Nasdaq, but also with the banks as well. Not a lot, but a bit, enough to lift the Russell and the other dudes up a little further. And then we need to rinse and repeat. And yeah, we need to stay on the short side. Our focus is on the short side. And simply because the short trade setup for position traders will come before the long trade position traders will come. So that's all. Not being biased to anything, just trying to take a balanced view and let the markets come to us rather than us chase them. Alrighty, on that note, I shall leave you in peace.